Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon, and thanks for making time today.
Good afternoon.
Well, there seem to be expectations that the Federal Reserve might pull back a little on its monetary tightening. That and strong earnings for tech have led U.S. stocks to close out their best month since 2020, but in the first session of August, all three main indices saw moderate declines. What's the story in the global markets as we start a new month?
Yes, if you look at the August, it started with a slight decline by the three index. 7 out of the 11 S&P sectors all declined, particularly led by energy stocks, as the oil prices dropped quite significantly on expected weakening demand due to the global economic slowdown. If you look at the overall, the long-term and short-term interest rate differentials, it has crossed over. The yield curve has inverted. Now, if we look at the 10-year minus 3-month, also inverted. So all that is taking a concern because possibility is that the economic recession might be coming faster than expected. And therefore, if we look at the futures market of U.S. right now, it is down by about 0.5% for S&P 500, and NASDAQ is down by about 0.6%. Of course, the earnings numbers are looking quite reasonably well. Up to the second quarter numbers, more than half of the S&P 500 companies have released the earnings, and around 70% plus of the companies are releasing better than expected EPS, and also close to 70% of the company are showing better than expected sales numbers. So far, numbers are good, but I guess the concern is that what is expected to be in the future as the economic recession might be coming faster than expected.
Well, Korean stocks today down by about 0.5% on the KOSPI, 0.4% on the KOSDAQ. Foreign investors continue to buy, but institutions selling today. Samsung was one of the few big names with a gain. Tell us about the domestic market.
Yes, as you said, foreign investors are continuing to be a net buyer of Korean market, as the U.S. dollar seems to be stabilizing while the Korean won is gradually appreciating. Foreigners have net bought about 300 billion won worth of KOSPI, but as far as the KOSDAQ is concerned, they sold about 100 billion. And also, they are net seller of about 283 billion won worth of futures market. Retail investors are the ones that net bought all three segments, the KOSPI as well as KOSDAQ and futures market. Institutional investors are major big seller of the KOSPI. Right now, if we look at the export numbers, it has shown quite a bit of a growth of 9.4% year on year in July. But this is actually accelerating from 5.4% gain in the previous month. But, of course, people are concerned about the economic slowdown globally. And also, if you look at the Korea's manufacturing PMI numbers, it is coming in at below 50. It was 51.3 in June, but now down to 49.8 in July. So clearly, there's quite a bit of uncertainty regarding the issue of Ukraine war and also China's COVID-19 policies and overall economic conditions. Of course, we have to watch more to see whether economic slowdown is happening on a global scale. Of course, sentiment is quite poor, but I guess the U.S., the overall consumers' fundamentals seems to be quite stable, and therefore the consumption numbers are coming in reasonably good, and therefore the market is not tanking. But for the time being, the uncertainty still remains, and we need to watch and see how Korea will be affected by the global slowdown.
Well, Mr. Yu, last month in Korea, consumer prices rose by the most since the Asian financial crisis of the late 1990s, 6.3%. Food was a big driver of the increase, along with utilities and fuel. At this point, we could be looking at 5% inflation for the year. What do you see happening with consumer prices?
Yes, as you said, the consumer price of South Korea jumped 6.3% year on year in July. Has accelerated from 6% increase in the previous month. It is fastest rise since November of 1998 due to particularly high energy and food prices. Clearly, oil prices being the biggest jump showing in the previous month. That has resulted into significant increase in inflation. Korea is highly affected by the oil prices. But if we look at the oil prices right now, it has fallen to $93 per barrel for WTI, and also the Brent is also fallen quite significantly. And therefore, the overall energy-related inflation is expected to come down in the future. But nevertheless, if we look at the South Korea's Bank of Korea, they have raised interest rate to 2.25% earlier in July, and it is expected to continue to raise interest rate close to what U.S. Fed is doing. Fed is expected to raise another 0.5% in September, and therefore the BOK might be following the suit. Overall, inflation numbers are highly affected because of the U.S. Overall salary increases, and that results into continued very strong consumption numbers, and that results into higher inflations. Of course, the supply chain bottleneck is one of the major issues, and also this oil prices affected by the war is the major issues. But nevertheless, at least one third of the inflation numbers are coming from the heavy consumption numbers, and therefore we think that inflation is not going to fall aggressively, but rather gradually fall to maybe 3% territory by the end of next year.
Got it. All right, we'll keep an eye on it. Mr. Yu, thank you as always for coming on the program. We really appreciate your insights.
Thank you very much.